Hi, this is James Steele IV of Trilogy Promotions Inc., representing ThoughtWorks Studios, the Wealth Coaches, and the Wealth Academy, and our newest exciting project, ReeBike.ca. We are proud to have Act Now as a referral partner to our project, and you can access their private landing page on our website by scanning the QR code or by visiting the page directly at actnow.reebike.ca. Let's take a moment to talk about one of my favorite topics, and maybe yours. Let's talk about money. When I first started as a financial advisor, one of the first charts I was ever shown was this here called the Financial Success Pyramid. What it reveals that if you start at age 18 and work right till age 65 and retire, you have a 54% chance of being entirely dependent on a government pension or old age security. 24% of us won't make it to age 65. 12% will be entirely broke at retirement, and 4% will need to keep working past their golden years just to make ends meet. That leaves 5% of us that will be financially secure, meaning you've got more money than expenses and you can live a comfortable retirement. Of those 5%, 4 out of the 5% own their own business. So overall, we have a 95% chance of failure if you follow the traditional model of working a job for someone else for your entire life and saving according to what the school system and your employer tells you to do. So my question to you is, why are these results so dismal? Could it be because most people have low-paying jobs? Well, I used to think that, but it turns out the average wage in Canada is about $68,000, and over a lifetime you'd earn $3.2 million at that rate, not even accounting for inflationary salary increases. How about poor financial skills? Well, that's definitely a possibility. It is true that most of us are not taught about money anywhere along the line in school. But lack of planning, this is an option. If you fail to plan, then you're planning on failing. And it is true that most people spend about 12 hours a year planning the family vacation, but less than 2 planning the family finances. So that's a potential. What about saving enough? Well, the average Canadian saved almost $10,000 or 15% of their salary. That should be enough if you do it right. So I don't think that's quite the answer. How about making the wrong investment choices? Well, that's a possibility. In your own situation, do you use the best strategies such as tax deferral, dividends, capital gains, stocks, ETFs, etc. to achieve your financial goals? Let's find out what some of the more successful people in the world have to say about money. One of my favorite mentors is Jim Rohn. He said, if you're not financially independent by the time you're 40 or 50, it doesn't mean that you're living in the wrong country or at the wrong time. It simply means that you have the wrong plan. Now, Robert Kiyosaki, the author of the Rich Dad, Poor Dad series, he said the biggest threat to your wealth is lack of knowledge. Personally, I agree with that one. And Jim Rohn also said to become financially independent, you must turn part of your income into capital, turn capital into enterprise, turn enterprise into profit, turn profit into investment, and then turn your investment into financial independence. So what he's talking about there is owning your own business. So regarding the lack of knowledge, do you know about the alternatives to typical bank-promoted investments that pay only 5 to 7% long-term rates of return? Do you know what the rule of 72 is? Well, quite simply, it is you take 72 divided by your rate of return. Let's use 7%. That tells you that in 10 years, you could double your money. You could turn $2,000 into $4,000 at that rate of return. Leave it invested for another decade, you would turn that $4,000 into $8,000 and so on and so forth. Perhaps let's talk about lack of opportunity. Could be that you've never been invited to access some of these strategies of the ultra rich. And if you don't have a high net worth account of $1 million plus, you probably are not working with the high net worth financial advisors that typical average investors don't have access to. Let's take a look at that job that you work 47 years for. You may not realize this, but you are the highest cost to your employer of all the expenses they usually have. On average, 40% of the gross revenue earned by the business is paid out in labor to all the employees. So the company must sell $100,000 in sales to pay you your $40,000 a year salary. But employees get paid first with this model. Now, looking from the employer's perspective, We have a $40,000 labor expense that comes right off the top. Then we have property, plant, equipment, utilities, basically rent. And then all the marketing, advertising, and promotional costs to drive the sales of the company. That comes to about $80,000. And you got to pay corporate tax on that of about $7,800, which leaves $12,200 left over, or about a 12.2% profit margin. Now, of course, the executives, they're going to want to get paid their massive bonuses and the CEO's salaries and so forth. So that's about 50% of that typically. And then if it's a publicly traded company, you may have shareholder dividends of about 6% on that $12,200. That's $732. And that leaves about $5,368 in retained earnings, or about 5.4% overall margin for the company to put back into its pocket. Now notice in this model, the investors got paid last, whereas the employees get paid first. So here's a question for you. What if investors could be treated like the employees and get paid first? Wouldn't that be a better deal? So here's a question for you. Who has heard of a joint venture? Or how about royalties? Well, a joint venture is created and crowdfunded by interested stakeholders, which we call joint venture equity participants, who both fund and get to work in the project. Now, this business model is unique and it's not typically offered to most people. In fact, most have never heard of it before. But a joint venture is done every single day of the week, and it's a very powerful and valid form of business structure that spreads risk and enhances returns for its funders, very much like a mutual fund would. Each joint venture equity participant contributes a set amount of capital in exchange for, say, one royalty unit in the joint venture, and a pool of royalty units represents a fixed number of units, like 100, in the joint venture ownership pool, where each royalty unit earns 1 over n, or in our example, 1 over 100, or 1% of all the activity that occurs in the joint venture. And each joint venture equity participant is not a passive investor, but it actively can contribute skills and sweat equity in the business in the form of marketing, advertising, social media, just generally promotional activities of the business for the benefit of all. So what is success? Well, H.G. Wells said, if you find a problem in need of a solution, then find a way to fill it, well, that'll lead to success. And Steve Jobs of Apple said, if you define the problem correctly, you almost already have the solution. And Zig Ziglar says, success occurs when opportunity meets preparation. Hopefully what I've just done up till now is prepare you to understand the opportunity that you're about to see. In fact, I presented some of this information to Banff City Town Council on February 10th, 2026, offering our ReeBike solution. Now, what is at issue in Banff? So these are some of the challenges that I pointed out to City Council. First off, they got a traffic problem. Almost 7 million cars, over 4 million guests come through those turnstiles every year. And that's a lot of tourists to have to deal with. And that leads to, of course, a lack of parking. Parking spaces are hard to come by in town, especially when residents that live and work there are using up those spaces during the daytime. So the city is now trying to bribe the citizens to buy an e-bike, and they'll incentivize them with up to $500 back on that purchase, and encourage them to drive around town in their own e-bikes rather than using their vehicles. Also, third-party transport sites such as Uber are not allowed in the city. They don't have adequate city buses themselves, and relatively limited taxi and shuttle provision. And then finally, they don't allow the short-term commercial micromobility plans like those scooters and e-bikes that are left all over the street. They don't want the clutter. Of course, the federal government has opened up all the national parks for free, again in 2026, and that is going to push the expected traveler load of 23,000 a day, or 2,000 people an hour, coming through that town from 9 a.m. to 9 p.m. every single day. And finally, they're not allowing residents to buy these e-bikes and then rent them out like they would on an Airbnb called peer-to-peer rentals, because they're not going to grant them a business license to do that. And thus, we started the ReeBike project, which is monetizing the e-mobility economy. And what we do is we provide crowd-funded, managed e-mobility solutions to towns like Banff. So as we earn revenue, that is paid on a variable margin to various stakeholders in the joint venture. We have a minimum 1 hour rental time on our bikes at $25, which works out to the competitive rate of 42 cents a minute. There's a commission for the booking app that accepts the reservation of 10%, and that leaves 90% for everything else. And the very first people to get paid are the royalty unit holders at the very top at 35%. And then there's a host manager fee to whoever hands over the bike to the customer. And there's a bike manager who rebalances the load between various destinations to cover our predetermined bookings. We have an advertising fee that's payable to any third party that advertises for us that has a QR code, including joint venture equity participants can each have their own code and drive additional traffic for additional margin. And then there's a joint venture ownership pool manager who disperses all the money, counts it all up, and that leaves a 15% margin for all other expenses that we need to cover. So the joint venture will have 100 e-bikes operating for a minimum of 150 days over the peak season. Doesn't mean we can't rent them the rest of the year, but our assumptions are just based on those 5 key months of the summer. And we're going to rent out each bike a minimum of 6 rentals per bike per day for 1 hour each. And that means 600 total daily rentals, 90,000 seasonal rentals, and about 600 daily rental hours on all those bikes, which is about 40% of the total availability of rental time from 7 a.m. to 10 p.m. And that means $150 in gross revenue per bike would be earned, generating $15,000 in gross revenue to the joint venture. And that means $2.25 million spread out over those 5 months. So now the really exciting part is of that $2 million, 35% of it comes back to the joint venture equity partners as royalties, which means each royalty unit, if there's 100 of them, would earn $7,100 a year in annual dividends. That's an annual rate of return on each $2,000 royalty unit of about 254% with about a 42-day break-even time if we actually hit those numbers running on day 1. Now we plan to operate this pool for 3 to 5 years before selling off the bikes and then buying new ones. So over the next 3 to 5 years, a typical royalty unit should earn 3 to 5 times that $7,100, which puts us around $22,000 to $36,000 over that next 3 to 5 year period. That's pretty exciting. As a royalty unit holder, you actively work in the business by helping to promote it through online, social media, and so forth, and you earn a substantial royalty for that effort as a joint venture equity partner. So here's the big question. Who wants to create some serious wealth by paying down debts with OPM? Anybody know what OPM stands for? It stands for other people's money. Who specifically? The joy riding tourists that are riding our bikes. So one royalty unit will pay about $7,100 a year based on those forecasts, or about $600 a month. And the average condo fee in Alberta runs about $500. So you could use one royalty unit to totally cover your condo fee payments every month using other people's money. That's pretty exciting. Now, for those of us who have a mortgage, which is a lot of us, how do you pay off your mortgage in 16 years? Well, here's a strategy. We know that one royalty unit will pay those numbers, about $7,100 a year, almost $600 a month. And the average Albertan's mortgage debt is about $340,000 with a monthly payment of almost $2,100. You will pay off about $288,000 in interest and pay out $621,000 over the next 25 years on a standard mortgage. So what if we were to take that royalty payment, still make your monthly payment on your mortgage, but apply that entire lump sum once a year to the end of your balance on your mortgage and see what happens? We pay off our mortgage in 16 years and save almost $112,000 in interest. Now, if you want to pay it off faster than that, same numbers still apply, but you're going to need 4 royalty units, so just multiply everything by 4, and you'll generate a lump sum of $28,470 a year. Now, still have the same monthly payment that you're making to the bank, but in addition to that, you make the lump sum payment at the end of each period, and you save yourself $196,000 and pay off your mortgage 17 years early in only 8 years, using other people's money from joyriding tourists riding ReeBikes. Well, that's pretty cool. That's how you can create some wealth. So if we go back to the financial success pyramid again and we look at those numbers, essentially what we're doing is we're moving you from the bottom as a normal investor would and making you like an employee and moving you to the top of the pyramid so that you can be in the 5% who are financially secure at retirement. Now here's a cool idea that we came up with. Who wants to fund a charity or support a worthwhile cause? Why not crowdfund it? You could contribute some or all of your royalty payments towards a charity, and some possible worthy causes could be a private members association, a church group, maybe an elementary school field trip that needs funding, or they need new band instruments or uniforms or miscellaneous projects at school, or perhaps a documentary film. Someone needs to crowdfund a documentary. Or health and medical causes such as cancer, kidney, diabetes, corrective surgeries, all kinds of things can be funded with this. It's really up to your imagination. And here's how you would do it. Let's say you have 100 people, maybe they all attend a seminar or something, or you have 100 people in your group. Well, they each contribute $20 to the cause. That'll allow that charity to buy, or that cause to buy one royalty unit of $2,000. And this is the golden goose that keeps laying the golden eggs to fund the cause annually for the life of the project, for the next 3 to 5 years perhaps. So one royalty unit could turn into $21,000 to almost $36,000 over that 3 to 5 year period, which is 11 to 17 times the original donation amount. So literally, this is the gift that keeps on giving. So this is your next steps. Scan the QR code or use the website actnow.reebike.ca and take a look at the detailed information page we have about this opportunity, which is explained from our now referral partner, Act Now. You would want to register for our next webinar. Now, depending when you watch this video, this date may have already passed, but for the next 3 Wednesdays up till April the 1st, 2026, we're going to be doing a regular Wednesday night session for about 90 minutes to go through all the details on this project and actually plug in various numbers and those assumptions and see how those results work out. So you have an opportunity to give us your insight on what you think are realistic numbers to plug into our spreadsheet if for any reason you don't agree with what we have. You definitely want to study the case for e-bikes and visit the dedicated opportunity page to do that at case.reebike.ca. And then finally, you want to reserve your place in the joint venture ownership pool by going to jv.reebike.ca and clicking on the purple button down near the bottom, reserve my spot now, and that'll get you a reservation into our pool, and you could be part of the first one that we launch in 2026. So I want to thank you for taking the time to review all of this, and we look forward to answering your questions that you may have.